Let me ask you one simple question. Who do you think makes the most money in the market today? A person with a chart or an algorithm with millions of calculations per second? The answer is obvious. The market stopped being a place where the winner is simply the one who knows indicators. Today, the winner is the one who understands context, speed, and price behavior in real time. And this is where the problem lies. Most traders still trade as if the market hasn't changed. They wait for signals where they no longer exist and then wonder why their trades don't work. In this video, I'll show what modern trading looks like in practice and break down 3 artificial intelligence indicators that allow you not just to enter trades, but to understand why the market is moving the way it is and where the money is in that movement. Let's start with the key problem of classic indicators. They are fixed in a single logic, one algorithm, one calculation, one reaction to the market. They don't care whether the market has sped up or slowed down, whether news has come out or a dead period has begun. But today the market constantly changes its regime. Not only the signal itself matters, but the context, volatility, market phase, macroeconomics, even the beginning or end of the month. All of this affects price behavior. Manually accounting for such a volume of factors becomes almost impossible. This is exactly where indicators with artificial intelligence come into play. To make this clear, let's look at a simple example. Take the classic Supertrend. It shows the direction of the trend and the moment of momentum change through a color shift, but it has only 2 parameters: period and factor. For example, the standard 10 and 3. That's it. It sees nothing beyond those values. Now imagine a Supertrend that analyzes not only price, but also market context. It looks at the last 100 candles, evaluates volatility and the strength of the move. As a result, it doesn't just change color, but suggests how meaningful that impulse actually is for entering a trade. We remove the regular Supertrend and add the machine learning Supertrend indicator by the developer AlgoAlpha. In addition to the trend line, you see numerical volatility values. 1 is low. 2 is medium, 3 is high. The value 3 appears at the moment of maximum impulse, where the probability of a high-quality move is significantly higher. The key point here is that entry is made not on a color change, but on a combination of trend and volatility. In the settings, you see the same basic parameters 10 and 3, but also the number of candles on which the algorithm was trained. In our case, it's the last 100 bars. We simultaneously see the trend direction and understand which phase the market is in. Using Bitcoin as an example, you can see that high volatility is about 662 points, medium is around 460, and low is roughly 200. This makes it possible to clearly understand at which moments it makes sense to enter a trade based on Supertrend. It's important to understand that the colored rectangles are not automatic entries. The logic is simple. A value of 3 appears, we enter a trade in the direction of the trend. Volatility drops to 2, we take profit. At the same time, within one trend there can be several such impulses. The trend continues. Volatility accelerates again, a 3 appears again, and that's another entry point. Like any trend following tool, the indicator works poorly in a range. But this is where artificial intelligence plays a key role. In a range, volatility values simply don't appear. The indicator literally tells you that it's better not to trade right now, thereby filtering out false signals. Let's move on to the second machine learning tool, which is excellent for short-term and medium-term moves. This is the machine learning KNN-based strategy by the developer Capissimo. Its strength lies in the fact that it analyzes several data sources at once: impulse, momentum, relative strength index, volumes, and volatility. As a result, you get simple and clear flags on the chart that show entry points with a high probability of playing out. If you go into the settings and open the indicators tab, you'll see which data it uses: RSI, rate of change, commodity channel index, and momentum. You can enable all of them at once, and then the algorithm will look for confluences between different signal sources. These confluences are exactly what form the final entry point. It's also important to make sure that the both mode is selected in the settings. This means the indicator simultaneously takes into account both volume and volatility. In most cases, this is sufficient. There's no need to configure anything else. Even in narrow and complex market areas, where most indicators become useless, this tool continues to produce working signals. Here is a good entry point down, then another one. Here is an upward signal, then down again. These are situations that are extremely difficult to analyze manually. At the same time, the indicator does not lose effectiveness in a trending market. It's only important to consider the global direction. If the market is in a long-term uptrend, signals against it are better skipped. For example, if a sell signal appears within a strong upward move, it's more logical to ignore it and work only in the direction of the trend. This indicator is great for beginners. You see a flag, enter a trade, and exit either on the opposite signal or according to your own profit-taking rules. And finally, the third tool, machine learning Lorentzian classification. It is designed to identify and hold long-term trends. Its main feature is that it recolors candles not based on the actual movement of each individual candle, but based on trend logic. The main signal here is the appearance of a flag. Green means entering a long position. Red means entering a short. After entering, you stay in the trade until the highlighting changes color. This allows you to ignore market noise and not close the position on every correction. Look at this example. A green flag appears, we enter a long position. The price corrects, red candles appear, but the indicator continues to highlight them in green. This means the trend remains valid, and we stay in the trade. The exit occurs only when the highlighting changes to red. The same works for downtrends. A red flag appears, the candles are colored red, and we hold the position until the indicator starts highlighting the market in green. The key setting here is the number of bars for machine learning. By default, 2000 candles are used, and this is the optimal value. The more bars, the rarer the signals, but the stronger and more reliable the trends. At the core of the indicator is a moving average calculated on candle close. It seems like a simple idea, but combined with artificial intelligence, it turns into a powerful tool for working with long-term movements. If you strip away everything unnecessary, the idea here is very simple. The market is no longer about guessing, it's about understanding, and anyone who continues to trade blindly will always be reacting after the fact. Artificial intelligence indicators don't make money for you. They do something much more important. They show what is actually happening in the market right now, where there is impulse, where there is a trend phase, and where it's better not to get involved at all. When you start seeing the market as it really is, rather than the way classic indicators draw it, trading stops being chaos. On this channel, I regularly break down exactly this approach. Real tools, real trades, the logic of professional trading without illusions. If this philosophy resonates with you, subscribe to the channel and stay here.